Thanks for joining us for today's episode of Small Talks for Big Change, where we help simplify financial topics to help with your financial wellness. My name is Michelle Enriquez, Membership Development Manager here at Patelco Credit Union, and today we are joined by Walid Hissen, who is our Vice President of Deposits. Walid, so happy to have you here on the show today with us.
Oh, thank you for having me. Always happy to be here.
So you've been busy lately with everything that's been going on in this savings rate environment as our Vice President of Deposits. You also recently did a radio spot to talk about IRA savings. So let's get right into it, and I'll ask the question that we're asked in the community nonstop, and realizing that there's a very long and technical answer to this, but help us understand, why rates are so high lately. And while we're seeing some of the highest rates on deposits in a long time, rates on loans are also very high. So help us understand why that is.
So there is a very long and technical answer to that question, but I'm going to spare you that. Let's go back a year back in time. Okay. So in the last year, what have we observed happening in our economic environment? We hear a lot about inflation. In fact, inflation hit about 9%, a little bit over that in the last year. And that's very concerning. Why is it concerning? One, the average inflation rate before that was between 2 to 3% since the 90s. So inflation has been fairly low, and that's a good thing for consumers because every time you're thinking of buying something, investing in something, and you put money on the side for it, you know the price is not going to get away from you, and you're going to end up chasing the price to buy what you want to buy. So the Fed takes the inflation rate fairly seriously, and their objective is to get it to that 2 to 3% rate. Okay, now the Fed has a lot of tools to work on inflation. One of the most important tools is what they call the discount rate. And what they're doing is they raise the rate for banks, and that forces banks to raise rates on the deposit side, which is good for consumers that have cash, and on the lending side, which is not so good for the consumer and business owners who want to borrow money to spend additional cash. Okay, so the idea there is by increasing the rate, people will borrow less and spend less, and then you take a heated economy where people are overspending, and when people are overspending, more people want to buy the same thing, and that drives the price up. So when less people want to buy the same thing, that drives the prices down, and that reins in inflation from a Fed perspective. So the discount rate is what the Fed raises the rate with, and that impacts bank, and it forces banks to also increase the rate. Now, what has happened over the last year is the Fed has increased rates by roughly 5%. That's unprecedented. The last two cycles in 2008 and in 2019, when we had a rising rate environment where the Fed was raising rate, it took them roughly about 2 years to reach 4%. So the speed of the rate going up is matching this of how high the inflation rate is, and it's creating a lot of talk, and it's really shaking up the markets a little bit.
So what we see on the consumer side are these high rates, and you can't get down the freeway without seeing tons of billboards for
Correct.
High CD rates. And so as a consumer, you're kind of left to try and decipher, which rate to take advantage of and which instrument to use. So I have to tell you a story. And as you know, my team is out in the community working with organizations to bring financial wellness to their employees. I was at an architectural firm recently giving a lunch and learn presentation about some of our products and services, and I get to talking about savings goals and different savings instruments that one can consider for savings, and I bring up CDs. How great the rates are, and I get stopped by a young person in their 20s, and their question for me was, what is a CD? And in that moment, once I got past my initial confusion of the question, I realized, we haven't talked about CDs for maybe longer than a decade just because the rates were so low. We weren't in this savings environment that we have now. So I stopped and apologized and explained, but we have to realize that we can't assume that our members out there all know what a CD is and, how that contrasts against some of our other savings instruments out there. So break down what a CD is for us, and, is that offering a better return on our investments these days versus something like a savings account or a money market account?
Great question. Let's start by kind of focusing just on the term CD. Mm-hmm. CD is an acronym, and it's the letter C is certificate and the letter D is deposit. So it's a certificate of deposit. And I'm going to stop here just for a second because deposit is banking lingo. Mm-hmm. And basically what it means is you have cash, you're going to put it in a bank or a credit union, and banks and credit union call that a deposit because you go to a teller or somehow and you deposit it into the bank. So we call these deposits. So a certificate of deposit is basically a certificate. And the reason it's a certificate is because unlike the other instruments that the bank has, for example, the checking account where you put money in it and you use that to spend, or a money market or savings where you put money in and that's fairly liquid, you can pull money out anytime you want, a certificate has a contractual element to it. Mm-hmm. And that contractual element is basically two parts. The first part is a guaranteed rate. The other part is a specified term. So let's go to the guaranteed rate first. When you make that agreement with your credit union on the certificate of your choice, you're going to get that rate and it's going to be guaranteed. So let's take, for example, the day before COVID. The day before COVID, lockdowns and that, basically what we saw is that rates were normal. Mm-hmm. The day after, all rates dropped in a second.
Right.
Now, if you got a CD just the day before, you would have been locked into that rate, and even though rates go down, you still get that rate. And you get it for, this is the second piece of the CD, for a specified term that you had agreed upon. For example, it's 3, 6, 18 months, 3 years. So there's a lot of variability in terms, and they go up all the way to 5 years. Now, the difference between a CD and a money market is in a money market, you're going to get a money market rate, which tends to be lower. And at the same time, you're going to be able to pull your money out anytime you want. So here's where people get really, really anxious. What do you mean I can't pull my money out of a CD? I did not say that.
Right.
You can pull your money out of a CD, but because it's a contractual agreement, there is some forfeiture you have to do. Mm-hmm. So what you typically do is, let's say 6, 7 months, 8 months into your CD, you decide, you know what, I've got an emergency, I need to pull my money out. What happens? Typically, the first thing that you'll get is you'll get your money back. Okay. The second thing is basically you're going to get a portion of your interest as opposed to all of your interest. So typically, in banks and credit unions, they call that a penalty, but the penalty is basically just going into the interest that you would have gotten, and you would forfeit a portion of it.
So we're looking at our highest yields living with our CDs and then money markets and then our savings accounts. Is that kind of the structure of where we get the best bang for our buck, so to speak?
Correct. You typically would get your best rates with a CD.
Okay, wonderful. So it's that time of the year where our members might be receiving tax refunds. You might be receiving a bonus or a pay increase. And, we're always telling our members, put any kind of extra cash away, pay yourself first, as we like to say. And we've got plenty of options to help our members maximize that savings. So we're encouraging our members to visit us at patelco.org/rates and patelco.org/no risk to go see all the varying rates between those savings instruments that you just talked about. And Patelco's a great place to house some of those investments and getting started with savings, but we also like to make it easy. And, we're here for 7-10 minutes and we're talking about it today and helping our members make decisions, but you may not, completely be ready. So we have our certified financial specialists available at our branch locations and also via our virtual branch, where these specialists can help our members, determine what the best option for them is going to be based on their goals. So we certainly encourage our members to take advantage of those free certified financial coaches. So Walid, thanks so much for joining us today. I have a feeling we're going to have you back as, the year goes on and we experience these ebbs and flows.
Always love to talk about deposits, so ping me anytime.
Yeah, we know you love that. So that concludes today's episode of Small Talks for Big Change, where we help simplify financial topics to help with your financial wellness. We'll see you next time. Insured by NCUA.